Hello, this is Brian Shannon from AlphaTron's Blogspot. Today is Saturday, February 3rd, 2007. We're going to go ahead and take a look at some stocks for trading next week, starting on the 5th. I've got two pretty speculative stocks to start out with. First of all is Hoku Scientific, symbol HOKU. We looked at this stock earlier in the week and didn't get an entry. It didn't meet our criteria. But you can see how this previous high here is acting as support right now. And the stock had some kind of big volume event over here. It's pulled back. The volume seems to have dried up. Now I think it's in a good position to maybe continue higher once again. You can see that today's action, or Friday's action, took out this 5-day moving average, and it looks like it's holding a support right there. So now when we look at a 5-minute time frame, what I'd like to see this stock do is to make it back up above $5.20. That's where I'd like to purchase this stock. Once I'm in it, I'd like to put a stop down at about 501, which is just below this low right here. This is actually 503. So I'd put a stop at 501, give us 19 cents of risk. And I think the stock has the potential to make it up to at least $6 a share, which would give us 80 cents of upside for 19 cents of risk. So that makes a nice risk-reward ratio. Next up is Mama, symbol Mama.com, symbol MAMA. And this stock had some kind of big news event over here. It's kind of drifted lower on light volume over the last last month or so, and now it's right above that rising 50-day moving average, which a lot of times these little speculative stocks will get a bounce off that. So we'll just trade it for a quick bounce. Here's the line I'd already drawn in. I think seeing the stock trade above $4.58 is where we want to enter this stock. We could put our stop down here at about $4.40, so that's 18 cents of risk. And the price target would be right up here at about $5.10, where we had this prior support as well as resistance back here in late January. So that would give us 18 cents of potential risk with about 52 cents of upside, and that also makes a good risk-reward ratio. SOHU.com, symbol SOHU. This stock, you can see in here, let's take a look at the daily time frame first. We do have all these rising moving averages. We look at a weekly time frame, you can see that it's taken this resistance out. Maybe it's going to head back up towards these 2006 highs. It's definitely in a good uptrend. It's got a nice volume pattern. The volume increases on the way up, followed by low volume consolidations. And looking at the 10-minute time frame, what I'd like to see here, first of all, we've got a little bit of resistance up at 27.10. We're not going to buy it above that. What we're going to do is we're going to look for a pullback to about 26.75. And what that would do, hopefully, is to go ahead and build a little bit of a right shoulder here to add to this left shoulder and this head. So we'll get the stock hopefully to shake out a little bit down to 26.75 and then purchase it as it rises back up above 26.90. So look for a pullback first, buy it on strength, and I think it can then push through this little level of resistance right up here. The height of this pattern is about, let's take a look here, we've got that at 27.10, and this is at about 26.10, so about $1. And that will give us a price target of about $28.10. Let's just call our price target 28 to be conservative. So that will give us 25 cents of risk with a stop at 26.65 and the potential upside of $1.10. So I might not have said that properly, but for, just to recap this one, look for a pullback to 26.75, then buy on strength above 26.90. A stop will go at 26.65, and our target is $28 a share. The one stock that we'll look at on the short side is shares of J2 Global Communications, symbol JCOM, and you can see here this weekly time frame. It's kind of battling with this longer-term trend line. It's rallied back up to that on light volume after breaking down hard. That breakdown occurred on a gap over here, probably earnings related, I have no idea, but it's come right to this 200-day moving average where it looks as though it's having a little bit of trouble. So what we'll do here on this 10-minute time frame is look for it to break below recent support at 25.75. If it can get below there, I think that makes a nice lower low to add to these lower highs here intraday, and then we could see the stock, so sell it short below 25.75, put a stop up here at about 26.05, so that's 30 cents of risk, and I could see the stock dropping back down to about 24.75. I drew that in wrong, but about 24.75, and that would give us a reward about $1 away for the potential risk of about 30 cents.